Hi, and welcome to Business 101 with Mareevuitton. I'm Marie, and I'm excited to have you join me. Whether you're just starting out or looking to sharpen your skills, this series is designed to equip you with the essential knowledge and tools you need to thrive, from basic terminology to starting your business covered. This playlist is comprised of my responses to the questions that came in when I posed the following. Give me 1 to 2 questions about business or tax that you wish you knew more about. In this video, we're going over business expenses and business loans. But before we jump in, a quick reminder, this channel is all about creating useful content that educates its viewers, and the way we know what topics are helpful to you is by clicking the thumbs up button below and sharing this video with others. And of course, we'd love to hear from you, so drop your questions and feedback in the comments below, and be sure to hit the subscribe button to stay updated. Now let's get started. Okay, diving into business expenses and general business questions, I do want to refer everybody to reference this small tax guide for small businesses. You can locate it. It's publication 334 on the IRS.gov website. Okay, don't download usually from anybody. I make sure that you're on the correct IRS website. That's www.irs.gov. Okay, in here you are going to find questions or answers to your most common questions. And a lot of times what I get asked, in this case, we're talking business expenses. Well, here's a good breakdown in chapter 8 of this publication, but I want to elaborate. Okay, business expenses are all costs associated to open, manage, and operate your business. These are deductible against your business revenue. This is what determines profit. Okay, profits are what your business is taxed on, or the business owners anyway, okay, when it flows through. But jumping back to business expenses, okay, most things are a business expense and can be deducted, but it's when people want to abuse that where it gets a little wonky and starts to raise red flags, okay? So I think for those that kind of just play with the numbers on tax, TurboTax or something, that's basically, not only is that fraud, but it's inaccurate, okay? And it just proves over time what a business owner who's not very good at business can file on. And if you don't care about that, then that's fine. You probably don't care about business funding, loans, being able to sell that business to someone else in the future, or to pass it down to somebody else in the future. Okay, but you can't talk about business expenses, profitability, and then obtaining business credit and loans. Okay, we're not reinventing the wheel. Business has been around since the beginning of time. So I just know that a lot of these new ways of looking at things are fraudulent. Downright fraudulent. So if something seems too good to be true, oftentimes it is. Okay, and so the easiest way to obtain business credit is to have good personal credit. People don't like to hear that, so they're like, I just want to get it in my business. Okay, the business credit is based on prior tax returns. It's basically tied to everything associated with the tax ID. Okay, so a lot of times the easiest way to do that is to figure out how to electronically earn revenue. So if you have credit card processing, a lot of times they will offer you great business loans because there's no denying that you're taking the money in. They can see it. They can take their fees before it ever hits your bank account, right? So if you owe them money, they will take what they're owed until you don't anymore, and then release the rest. So the easiest way to do it without a personal guarantee is to associate revenue with the tax ID. Okay, hopefully that makes sense. And to file taxes timely and correctly, because if you're telling your creditor or the loan lender that you're making this much money and your tax return reflects something different, you're probably not going to get that loan. That's literally what it looks like when you get a personal mortgage, right? You can do stated income, or I don't even think they do that anymore, but that's basically what you're trying to work off of, okay? Business loans work the same way that personal loans do. It's based on your credit worthiness and what's associated to the tax ID. That's it. That's all. Okay. Ways to pay less, is basically operating legally and properly, taking advantage of the tax strategies in any given industry or entity formation. Okay, but the best way to pay less is to tax plan. And you tax plan by telling the truth, or at least understanding the truth, and then presenting it. Okay, that is the best way. So when I know that there's big jumps, I want to stay up to date on our estimated tax payments, okay, on the individual level. Okay, that's my best recommendation for that. And payment plans. Okay, if you have an old payment plan that's outdated or you want to rework it, you're going to do that with each taxing authority. You're going to want to make sure that you are up to date on all tax filings. You can't be missing one or be behind on one, okay? And then once they do that, you can then log into your account at the IRS.gov website and submit an offering compromise. You don't need somebody else to do that, but it is solely based on accurate financials. So the more accurate and precise you can be, the better your odds are in getting that approved. But it needs to make sense. And that's the part that most people often miss, because they think that they can just put these numbers anywhere they want to, and that's really not the case, okay? That's why what I do, I think, is so important, even though not everybody, agrees with that, okay? I think you can use TurboTax in most cases, because the majority of people just they kind of roll the dice, okay? Because there is a way to make sure the same way that I operate and work with my clients is the same way that the taxing authorities do too. So if something is a red flag or doesn't make sense or just seems downright fraudulent, there are ways to confirm whether that's true or not. And as far as record keeping, I keep records indefinitely, but I use a general rule of thumb, 7 years, okay? Taking pictures of receipts is fine for detail, especially when you're paying in cash, okay? It's not really necessary if you if your books are being maintained, because that means their bank statements, credit card statements, and loan statements are being reconciled. So there are ways to catch mistakes or fraud very easily. So, record keeping, I would keep receipts if you want to for details, but realistically, make sure you're just doing the month-end processes, okay, is what that's the most important way to deal with audits and things like that. Okay, and writing off a portion of your vehicle, there's a number of different ways to do that, but it is the traditional generic way to do it is broken out exactly based on allocation, meaning we take, you're going to want to take your beginning and ending mileage, and you're going to want to track your business mileage, okay, and then that kind of comes up with a way that we work out that number. It's the same calculation or work through as TurboTax is doing when you're giving the same information, okay? But there is a formula to that, okay? And it's basically general accounting practices, okay? It follows general accounting practices, and it's allocating expenses or a portion of it, okay? So anybody that's well-versed or has an accounting background is going to know how to do that for you. Okay, if there are any questions on what I've just said, you can visit my website at www.mareevuitton.com, or you can take this publication. It's publication 334 on the IRS.gov website.